Ladies and gentlemen of the crypto space, we're live on a Friday, June 20th at 11:36 a.m. We're going to do this without some face to face today, but I'm sure it's going to be just as interesting and just as informative. Let's hit the rounds. A couple of interesting points I'll make today. So, folks have been saying for quite some time this quote unquote concept called alt season. That's a word that means there's bullish conditions or whatever the hell they want to describe it as. And they say it with a past tense like it already occurred or it's not going to occur. These types of rigid mindsets are not where success is found. What's pertinent is everything is in a day to day interpretation. And the most important day-to-day interpretation going on right now is literally happening right now for the first time this week. So, folks, as I've said, and as I just said, people are talking about alt season as in a past tense. They're talking about debt crises or whatever the hell a prevailing narrative is. But what folks aren't talking about is this week. June 20th, for the first time in 5 years. That's literally the story for today. And I don't understand why that's not talked about, not just much more, but like, holy shit, it's like right now. Just to confirm, anyone can confirm that my audio is working. It should be working. Just double check real quick. Yeah. No, this looks good. Okay. So that's today. I mean, look, you're staring at it on the screen. This is the first time in 5 years what's going on right now this week is happening. Folks are all wrapped up in regurgitated, recycled narratives, recycled stories. They lose themselves in the where they are in the situation. Now, we can say maybe it's different this time, and it clearly is. Clearly is different this time. I mean, look at that 100 SMA in the weekly. So, for folks sitting in the back of the room, we've obviously talked about this stuff before, but folks may not have been around. Here's your two bull markets. And clearly, this is your basically your repricing of Bitcoin from 16K to 105. And good part that's prior to 2025. So 2024, it's the 75, 80K region where we were doing this consolidation all throughout 2024, which is right here. This giant consolidation we had right at previous all-time highs back last year. So those are your three regions to understand. Now, when you look at a chart, the most important thing is this isn't data. This isn't numbers or this isn't just lines on a screen. This is your life. This is everyone's life that was alive during this period of time. This is the mode of operation, the modus operandi, and how people were living, what they were doing, the political climate, the economic climate. These fucking circles that I'm putting on the screen are representative of periods of life for people. So what was going on in these circles means everything. So what was going on in these circles relative to how the structure of the system is changing. Now that's where the 100 SMA comes in. Because as we've talked about over the years, these moving averages, they tend to, especially when looked at from a long-term time frame, they tell you the structure of the system and how it's changing over time. Now, if you go over to something like the 10-year and you go out to the 6 month, no other psychopath looks at 6 months charts, only the captain. So, and if you look at this very simple structure, which, all right, fine, whatever. So basically it's lower highs, lower lows. And then you have the breakout. So this is a trend structure, trends least. moving averages and levels is the order of operations for significance when looking at technical data. But here's your trend, and here's your breach of structure. Structure's everything, ladies and gentlemen. And this, we're going to go back to the DXY, but this in is an expression that the structure of the system is changing. That means everything. And that should mean everything with regard to your behavior, with regard to expectations. Go back to the weekly, get some granularity in the data. So look at this little blip in history that we love to stare at. It tells us so much about what's going on. Look at this. We got a little tiny circle on a screen that's data all the way back to 2014, and then you realize, oh, we're looking at a little blip in history because this goes much further. If you zoom out to the week, the monthly, there's your context for where this blip from 2014 gives us a relative window on time compared to history, the 80s and in the 2000, the dot-com era. It means everything. So let's zoom back into where we are to get a sense of where we're likely heading. Let's go back to the weekly, because that's where our 100 SMA is. I'm very curious because in 7 hours from now, we get to know whether we finally close below the weekly 100 for the first time in 5 years. Now, here's the kicker. Here's the kicker. 16 and 17 was a breach below the 100 SMA. And that is leading us into this, what could be very well a topping pattern for the 100. And it surely is a lower high compared to .com. .com back here got to the 120s. We never got there. So that is consistent with what I would say is a topping pattern from a multi-decade perspective. Now, for a topping pattern to occur, what do you need? You need to breach the 100 SMA, like we did back in 2020. But then you need to push below because you need the 100 SMA to start to trend downward, which means you're going to need a breach of the weekly 200. And that's where we're at from a structural standpoint. Remember, we came back to the DXY after looking at the 10-year, talking about the structure of the system changing. So we see the structure of the system changing on the 10-year. So why would the structure of the system not be changing from a dollar perspective? The dollar. So when you're early, it's often indistinguishable from being wrong. Now, early was 20 and 21. Nobody Everybody was getting a sense of what the hell is going on. But folks were early because you didn't, unless you had some sort of grand vision, I don't think people, or at least many people at all, saw what's going on with the dollar back in 20 and 21. Now, I only started to see it maybe at the end of 21. And I had some early narratives, and that's the Yoda post. That used to be my pin post about my 2022 narratives. But even those narratives warrant what's going on right now. We're going to go over to X in a second and look at Coinbase's last post. That'll be primarily the content for today. It'll tell us what the hell is going on. So these three circles right here, not this, are very different periods in time. This was just exuberance. This is 16 and 17, and this is was master nodes and Bitcoin forks and Bitcoin Cash and BSV and whatever the hell was going on. It was absolute shit. People figuring out what the hell blockchain is. And here, post 2019, as some people started to realize this was EVM land, the concept of smart contracts, immutable deterministic smart contracts. That was 20 and 21. That's what we learned these few short years ago. And now we've had to wait 5 years to get back to a breach of the 100 SMA to the downside, where people know what came out of 20 and 21 with regard to foreign exchange, credit, derivatives, liquidity financing, and liability printing, the five businesses of crypto. So, probably one of the most important takeaways is there has been no bull market since 2000, end of 2020. The real bull market started in 2021, and it's very short lived. It's only a couple of months, and that's where you get your biggest exuberance. That's when things start to reprice significantly, and that is not what has occurred because you need the structural breach, and that's when people start to behave differently. Looking at interest rates, the structural breach. This is people are behaving very differently in the bond market. I mean, historically, you had a risk off, and we haven't really seen much of risk off. It was now, more recently, we're seeing long term United States debt having meaningfully increased risk profile. It's not like 60/40 portfolio where the 40% in bonds are designed to offset losses in equities and risk. And that's not what these instruments are behaving like anymore. So there's a structure change. So the structure change that potentially is to come for dollar and dollar products, which are obviously derivatives of US debt, which is the system's money, is changing. It's changing in profound ways. And this is the story we've been telling. And this is maybe a decent culmination of that story because we're starting to get there. Finally, finally. Because once we see this breach, and maybe over the next year, we start to see this 100 SMA in the weekly start to trend down to 96 or whatever. We maybe see a blow off bottom and a breach of the 200 on the weekly. Oh, dear Lord, we haven't had a breach of the 200 on the weekly since 2003. 22 years, ladies and gentlemen. 22 years. And people are like, oh, dino coins, grandpa's crypto from 2019 and 2020. And we haven't seen a breach of the 200 SMA in the weekly since 2003. People are too myopic. They can't look back in time. You need to understand history to understand where we're heading. There has been no meaningful crypto bull market, whatever these phrases mean, periods of increased exuberance where we breached the 200 SMA on the weekly. That wouldn't be just a bull market. That would be your blow off top, your whatever we didn't experience in 20 and 21. And it's just starting now. This week, that is what drives me nuts about popular narratives, circulating narratives. This is when people should be excited, literally the most excited. They're finally breaking the weekly 100 now, right now. And this is when people are exhausted and what disenchanted and disillusioned, and now they're like, oh, they try so much to force the narrative, force things to occur with regard to portfolio performance over the last years, and all they had to do was wait until now. And now the portfolio do the work for most people as the structure of the system finally starts to show how different it is, how the structure is reshaping. Just like we're looking at on like this structural breach, this structure is going to have to break also. And if you zoom out, you start to see what kind of structure we're looking at, in my opinion, is a long-term downward trend in the dollar for the next 10 to 15 years. And it's not like it's completely precedented. That's what occurs cyclically. It's occurred twice since 1970s, 19, 71, post dollar shock, gold shock. And now it's about to occur again for political, geopolitical, and economic reasons. Morning cab, Joel. Much a pleasure. Killis, good morning. Sound good to go. Mix. Cab forgot his makeup this time. Yeah, I got no camera today. Good morning. Good morning. What do you think about the new project of Michael, the creator of Curve? Whatever the name of it is. I look forward to it. It's going to be an integration directly into, or at least be additive to, the Curve ecosystem. So, yay! Very much looking forward to that coming online and doing what we all speculate it will do for the Curve ecosystem. What would you yield basis? Yield basis is what it's called. What would you do if you would hold VE Link's position knowing that Nile will migrate to a brand new DEX and Foundation will support it? Uh, huh? My exposure to Linnea is vis-a-vis Nile, not Linex. Um, it is what it is, and I don't know. I don't know what the question is. Are you thinking about swapping your Linex to Nile? That is obviously an investment choice. Um, I I like the consensus narrative for Linnea, and that narrative is best expressed vis-a-vis Nile. Would that mean invalidation of a thesis in terms of potential cash flow from Linex? Yes. No. Yes and no. That's for you to decide, my friend. Is it an invalidation? So you had an investment thesis for Linex. Are you invalidating it? I don't know what you're thinking. For instance, myself, I never had an investment in Linex because I was more aligned with the kingdom as a group of protocols. And that was my thesis. And thus far, that thesis is not invalidated. And even Ramsey's on Arbitrum is still not invalidated, even though its performance is literally abysmal. Albeit the branding, the marketing, and everything is still intriguing to such a degree that it's very much not invalidated, in my opinion, for me and myself and how I manage my capital. Um, these are choices for you to make, my friend. It's not for me to answer what to do. You, there's a lot of subjectivity in this choice you have because Linux does something very similar to Nile, and if Nile does well, Linux may do well, albeit it may be excess diversification or just unnecessary infrastructure, given how similar the protocols are. This is where lack of diversification could hurt a portfolio. For instance, newer folks may have one or two portfolio investments as exposure, and everyone should expect investments to fail. Investments fail all the time. Whether and maybe you can invalidate it and get out and retain, save some capital, liquidate for some capital, and sometimes you can't. But that is should always be an expectation of any allocation of capital. Failure of an investment. Good morning, Cap. Masternodes low. You just bummed me out. I forgot how lost. Oh, two good old steak net. I missed those. Oh, didn't swap them in time. Yeah, if you swap them, uh, you know, whatever they're working on nowadays doesn't have much momentum. It has the same tech, very similar tech, and it's interesting, but I haven't had, I did swap in time, and it's not like you recovered a lot of capital compared to what StakeNet was at when masternodes were literally the talk of the town. So it's always pay attention, yes, but it's not like you lost too much in the conversion to whatever was a HydroNet masternodes or HydroNet, whatever the hell they're working on now. Also, another detail to add to the dilemma is that the Linux holders get an airdrop of the new MetaDex on Unichain. Okay, MetaDex on Unichain. Yeah, Velodrome call today, and Uni Foundation will directly support it. Velodrome, it's um, an optimistic super chain, Unichain. I mean, I can't see wanting or needing to own anything other than Velodrome and call it a day, especially um, with Ink and the Kraken narrative. Uh, it's just, I mean, it's like this black hole thing that's coming online. Whoopie do. There's new programs and protocols and projects and partnerships and support and foundation integration. It's irrelevant. It's all noise. New is irrelevant. And yes, this is certainly hard choices. Coinbase doing Coinbase doing big things with stablecoins. Yeah, now you're talking about where the future is and where we're heading. Stablecoins. You literally just said the word stablecoins, and we just had an entire opening monologue talking about stablecoins. Now, here's the biggest myopic reality for most people investing in crypto. They don't see it for what it is. Hey, look, this is the DXY. It's talking about the US dollar. This is talking about stablecoins. Or if you go over to USD versus CNY, you're talking about stablecoins. USD JPY, you're talking about stablecoins. You're talking about dollars, which are stablecoins, which are bank deposits, which are dollar liability. It's all the same thing. This is all connected. This is all about the dollar and stablecoins and currencies and payment currencies versus savings currencies and versus whole bunch of arguments about debasement and how to save, and it'll drive everyone nuts. So there's a couple of ways to simplify it, and probably the best simplification is the way I compartmentalize my portfolio. You have cash, which consists of Bitcoin and stablecoins, and then you have investments. And that's it. Investments produce more cash. Notice cash. Bitcoin, stablecoins, investments. And that's it. And if you want to treat something else as a cash, all right, cool. There's obviously potential to outperform by selling at the right time and buying at the right time. But now you're not an investor, you're a trader. Trading is not investing. Investing is slow, methodical moves with a relatively structured portfolio of cash investments. That's investing. And that's my definition. And I am entitled to define investing the way I want to. So I don't define trading as investing. And that's how I define cash. Cash is, for me, is defined as Bitcoin stablecoins. Hope that helps. So Coinbase is doing big things with stablecoins. So Coinbase earlier got approval, a regulatory license to offer crypto services across Europe. Great. Okay, so I wrote Coinbase to offer unlimited dollar lines of credit against pooled collateral across everywhere. Isn't that a headline you see a lot? Japan, JCB, Japanese Central Bank to offer dollar credit against pooled collateral. Okay, so that's where all this is heading. Oh, pooled collateral. And there's your dollar. Vis-a-vis stable coins. It's all the same thing. Dollars, whether they're bank deposits or 10-year treasuries or stable coins. It's all the same thing. This concept of a unit of account. And yeah, the supply is increasing. So you have CPI, consumer price inflation, and okay, so they keep it simple. Well, odds are you probably want more collateral and more spending cash, settlement cash. And that's the cash part of my portfolio is the Bitcoin and stable coins. Because the Bitcoin component of the cash is collateralizable, whereas the stable coins are not. But you spend the stable coins and you collateralize the collateralizable cash, and you're able to spend what you borrow against it. Okay, so the point is everything is much simpler than most people make it out to be. Dollar lines of credit. It's all about the dollar. And you go back to Coinbase and they have their classic marketing pitch, freedom and friction and all the bullshit that they're going to bypass the system. Oh, great. There's big business. Where does this all lead? This little leads to their base chain. Why? Because of DevOps. Okay, so maybe you need to be a little bit of a software engineer to understand that perspective. Operating their centralized exchange is a burden. Why would you operate a centralized exchange if you could outsource and crowdsource DevOps? And that's exactly what the potential for base chain is. Outsourced infrastructure where other folks are validating and they get compensated via validation and the whole validator concept, whole L2 narrative. And that's where there's massive savings. You save a fortune. You save millions and millions, and however much they're probably calculating at this point. Um, so the base chain narrative, and this is J.P. Morgan's stablecoin, which they just announced, going to base chain, and this is Aerodrome story with regard to Coinbase, and Coinbase is literally explicitly saying like Aerodrome is what it is, and they're tightly coupled to it. So it's a very obvious narrative. And was there $400 million in credit already issued against Bitcoin vis-a-vis the Coinbase platform? Okay, so this is all what's called foreshadows. All of it. This is all where it's heading. More and more and more. So there was one reply which caught my fancy, and he gets it. I mean, a lot of the Bitcoin maximalists get it. They just don't understand what's required for it to work. So let me explain this very simply. Really just stablecoins and Bitcoin. That's correct, except they don't understand how stablecoins work. It's not just about me sending you stablecoins and you sending KFC or McDonald's the stablecoins to make a payment. It's not just payments. The concept of finances, the concept of credit. It's the concept of the five businesses of crypto: foreign exchange, credit, derivatives, liability, printing, and liquidity financing. That's it. Those are the businesses. So that's what he doesn't understand. He doesn't understand the businesses. You need foreign exchange because Bitcoin doesn't fix anything if everyone in Asia doesn't want to use it. They want to have it. They want to have access to it, but the governments want to print currency. There will always be currency. There will always be someone who thinks they could do it right. There will always be alternatives and choices and options and systems of control. That's the whole point, and that's what the concept of foreign exchange is. One one group of people on the east side of the planet want to do something a little bit different than a group of people on the west side of the planet. Okay? That's foreign exchange is required for those groups of people to interact. So that's what never be a maximalist. You'll miss the obvious. You'll miss the five businesses of crypto. And this is big because for instance, he literally says stablecoins and Bitcoin. Okay, great. So, but do you understand how stablecoins operate in like an aerodrome base chain type of environment? How does credit get factored into the base chain? Because why would um, Coinbase want to manage this with centralized server implementations? Why would they want to handle DevOps when they could just literally code this into smart contracts, which literally already exists vis-a-vis Aave? I mean, literally, there's your credit right there in Aave, and all Coinbase needs to do is capitalize lending, which means they need to issue the stable coins such that people could pool collateral, deposit Bitcoin, and borrow stable coins. Vis-a-vis tried and trust, tried and trusted and tested infrastructure of Aave. It's the writing is on the wall for crypto fintech. You can't even make this shit up anymore. It's just like it's obvious and it's coming. Anyway, you make a good point bringing up Coinbase. Now, I don't like Coinbase. Great. So after the last 10 minutes of me talking up Coinbase, I'm like, I don't even like it. I don't use it. I have no need for it. Their base chain, okay, that we talked about a week or two ago of Aerodrome exposure. Great. I have my exposure done. I have no need to use Coinbase, but guess what? The rest of the world does. The boomers will use it. The people that cannot manage their own wallets will use it, and that's not a bad thing. It's a highly technical thing in many regards to manage your own wallets, and how it comes with security concerns, security considerations, and um, and the best. That's an so, OPSEC's another story. Um, but that'll be interesting how things play out with regard to management, key management. Account management. I don't know. I think we have a little bit of a glimpse of where things are heading with regard to account management, but I don't think we have a clear picture of where things are heading, especially as we still have to deal with quantum security and whatnot, and how things may play out over the next 10 years. I don't know. Good morning, Cap. Much a pleasure. Fugu, yeah, swap in the bag. Happy holder, big VE Ram. VRAM has done well. I with the rebases and whatever the hell I've done with it, it's never went underwater, even though it's dropped in the ranking significantly with regard to Arbitrum volume. So it is what it is. VE Ram. I've actually forgot about Velodrome presence over there. Yeah, right. So okay, so there's a new chain or a new AMM on Unichain. I mean, the Velodrome's already there, and they got the incentives, and they're cross-chain because of the optimistic superchain infrastructure. So, anyhow, that's the deal with that. Morning, Capusoon. Always a pleasure. Uh, Joel, Genius Act for stablecoins looking like it will pass the House and signed into law. Will DeFi be next? Why is it bullish for crypto in your opinion? So forget about DeFi. The word DeFi, that is a bunch of noise. That is normie talk. Stablecoins and understanding dollars, that's not normie talk. You realize all the meat and potatoes of everything folks are doing in crypto with regard to bullishness and excitement. It's about stablecoins and the alpha is understanding that and seeing that and realizing that. So the fact that the Genius Act is passing, that's it. You don't need I mean, obviously, other legislation helps clarify things, but the point is, once the Genius Act passed and you get your onslaught of stablecoins, these markets flood with stablecoins, and you already have your credit facilities, your pooled collateral facilities. It's called Aave. Just use Aave. It's literally the phrase. That's the catchphrase for Aave. Just use Aave. That's it. It's already everything already exists for this whole whatever people are hoping for it to play out, for it to play out. It already exists. All the infrastructure has already been built, and guess what? It's already been tested through 2022. That's the craziest thing. It's already been tested, stress tested, ladies and gentlemen. So you don't need DeFi to be next. What you need is exactly what's happening to just continue to happen, but it's already happening. So it's very, we're right here. You're right. Where are we? You made it. You are right here. That's it. You've been waiting 5 years for what's going on this week, ladies and gentlemen. Now is the time to be excited. Now, we were excited too early. Since 2022, we were prematurely excited, but but we understand why this week counts, and it's visually observable on this chart. Okay, enough. Enough of the captain talking your ear off of the same stuff. More next week. Let's keep it short and sweet for today, 12:10 p.m. Thank you all for joining me on a Friday, June 20th. 142 people made it to the end of the stream. I appreciate each and every one of you. You are all now a little bit more rational for sticking around to the end. The captain appreciates you. Stay calm, cool, and collected over the weekend. Stay rational, and I will see you guys and gals later next week. Until then, peace out.